Hi everyone. Thank you again for your patience in terms of like the technical difficulties. In terms of like what's recorded lectures. So just a quick overview in terms of our calendar. So right now, we're gearing up and preparing for our November 26th. So I think I'm anticipating that in terms of the recordings, we'll be able to post everything by Monday, November 13th. So this is would be parang our ramp up or parang how we'll be preparing for everything. So our November 26th exam is composed of three major topics. So you have your chapter 5, so that's basically inventory or basics of the inventory systems. You have chapter 6 or problem set 6, wherein we're gonna be taking a deep dive in terms of inventory cost flows. And then finally, we'll touch upon and deep dive in terms of internal cash and control when it comes to the things related to parent cash accounting. So with that said, we'll have back-to-back face-to-face classes in preparation for this and some optional classes so that we can properly pace ourselves as a ramp up in terms of our exam. So in terms of strategy, para lang hindi tayo ma-overwhelm, my request would be number one for Monday to Wednesday, what your focus should be would be gearing up for quiz 6. So dapat master na tayo in terms of chapter 5. So this is why I'm posting this recording. And then after the quiz, I know parang medyo it's kind of hard to concentrate for this. So what I'll be doing would be two things. I'll already review the quiz kaagad there. So we'll exchange papers and then we'll see already ano yung mga grades ng mga tao for this particular junction. And then second would be after analyzing how to review the quiz, we'll also tackle na the important concepts for chapter 6, which would be accompanied by naman a previously recorded session on it. So that by Friday, we'll have a face-to-face discussion na problem set naman. So how do you solve for chapter 6 problems in preparation for your quiz next Wednesday, so that's November 22, on inventory still. So that will happen. And then over the weekend, Saturday and Sunday, I'll already post everything that you need to learn for cash so that after our quiz on inventory, we can gear up na for the potential quiz or exercises for cash November 24. And then we'll have our review for the exam on November 25. So that will properly pace. So basically the idea here would be early this week, November 13 to 15, let's master inventory first. Come 16 all the way until 22. This is more of a combination of parang knowing the fundamentals for inventory and also preparing for cash. But from 21 to 22, our focus is inventory. And then 23 and 24, our focus would be on cash. And then finally, crystallize everything together for November 25, which would be our preparation for our exam. So with that said, let's now go into the deep dive for accounting for merchandise operations. So again, last week pa, ever since, I already submitted and already provided the PDFs, the answer keys, when it comes to answering inventory questions. So now, my request lang is, if you're having a hard time or parang yung tendency nyo was to just double check the answer and then learn how to do it, my request for you is in preparation for quiz number 3 or the first quiz of this module, just go through the exercises in terms of how I analyze it para lang we avoid any potential mistakes moving forward. So with that said, inventory accounting is very straightforward. We first define merchandise operations, understand that there are two inventory systems, and then from there, we focus on the journal entries and the analysis. So for this, we're just gonna be quickly breaking down each exercise, pero again, going back to some critical theory questions or theory concepts that you need to master in order for everything to make sense as we account for merchandising operations. So first thing to understand is that in module 1, we were just really studying one type of company, and that would be the service company. Straightforward, they sell a service. However, unlike a service company or a manufacturing company, what's special about merchandising operations is that they talk about finished goods. You buy a finished good so that you can sell a finished good. Wala ka nang gagawing iba dun sa product. So for example, if you're buying a plushie or like a stuffed toy, you buy it, you add a markup, and then you sell it. That's the only thing you'll do. No need to manufacture, no need to convert raw materials, etc., etc. That would be in terms of your manufacturing product, right? So with that said, the next thing that we have to know would be what would be the formal definition of a merchandising company. Well, ultimately, two things lang naman yung kailangan yung malalaman is that ultimately they buy and sells goods and merchandise. And then number two, their primary source of revenue would be their sales, right? So there's two types. You have your wholesalers that sell to retailers, so business to business, and then you have your retailers that sell to end consumer. But at the end of the day, they're circulating one type of finished good lang. They're not doing anything to it, directly buy and sell. And to really appreciate this, we look at the unique operating cycle of a merchandising company, that everything revolves around their inventory, right? So you start with cash. So may cash ka to start the business. Majority of that cash, you'll buy inventory. So you'll buy inventory. And then, of course, as you know, usually the inventory is shipped overseas or abroad. So, i-deliver pa sa'yo. So, the question here would be, who pays for the freight, right? Is it the buyer or the seller? If you, the buyer, pays for it, tataas yung inventory mo. Why? Because the value of your inventory is how much you paid for it to get to you, right? And therefore, tataas yung inventory mo. So, you turn your cash eventually into inventory. This inventory, wala tayong gagawin. We're not gonna manufacture it. We're not gonna do anything with it. We're just strictly gonna sell it to the end consumer if we're a retailer, or to other retailers if we're a wholesaler. From there, when you sell inventory, it will turn either into cash or accounts receivable, right? So accounts receivable eventually will turn into cash. And then you can repeat the cycle again. Now, with the extra cash, you can buy inventory, sell it again, get cash, and then buy inventory, etc., etc. So clear. The next step is that, okay, we understand this unique operating cycle. In terms of accounting, what should we take note of? Well, we now go into the fundamentals of inventory systems. That number one, we need to understand ano ba yung formal definition of inventory? Number two, what's the unique way that we're gonna be creating our income statement? So knowing ano ba yung difference ng gross profit versus net income. And then quickly, just identify what would be our cost flows and differentiate between two of our inventory systems. So in terms of inventory, there are numerous definitions, but you can really assess it na. It's essentially that these are your raw materials, your work in process, and your finished goods, right? For our case, since we're talking about manufacturing company, we're talking about inventory as finished goods. So basically, they're held for sale in the ordinary course of business. Kaya ito. However, if you're a manufacturing, it's process of production, meron kang work in process in the form of materials to be consumed in order to render the service or in terms of raw materials. So that's the first thing. Please master the formal definition of inventory. The second thing that I want you to understand is that our accounting is still the same for module 1, right? Revenues minus expenses is equal to net income. However, the unique thing about merchandising companies is that they have two types of expenses. So in the service company, they only have operating expenses. Sa merchandising company, they want to have a special category for expenses that are related to the inventory that they sell. Ang tawag nila doon would be our cost of goods sold. The second would be the other expenses that's not related in terms of that product. So these are your operating expenses. So now, what would be your key definitions? So sales revenue is basically your revenue coming in from sales. Your expenses are broken down into two. Your cost of goods sold, that's related to the merchandise you sell. And then operating expenses that are other expenses outside those related to the merchandise sold. And then finally, meron tayong bagong term, the gross profit. So gross profit is sales revenue minus expenses. Matching lang the revenue and the expenses related to the selling of the merchandise, right? So mathematically, how we look at it is that we're confident na walang nagbago, right? We still start with revenues minus expenses is equal to your net income or net loss. But however, our expenses, we break it down into two. We have our cost of goods sold and our operating expenses. And then from there, our revenue minus cost of goods sold will eventually give us our gross profit. So essentially, gross profit minus operating expenses is equal to net income or net loss. Or revenue minus COGS is your gross profit minus OPEX is equal to your net income or net loss. So essentially, the very first thing that I want you to master is this equation, right? The comprehensive income statement equation. Now, given that it's an equation, kahit ano yung mawala dito, you need to be able to solve it. My suggestion is break it down into two. You have the first part of the equation, which is sales revenue minus cost of goods sold is equal to your gross profit. That's the part one. Part two is gross profit minus OPEX is equal to net income or net loss. Para you know the interactions between the first part and the second part, right? But essentially, it's just one whole equation. Hahanapin nyo lang or i-manipulate nyo lang via math, right? So from there, the next thing that we need to know would be cost flows. So in inventory, I don't want you to be intimidated. All you have to do is identify lang naman two things. Ano ba yung quantity of products? And then what are the cost of the products involved? So that would be your cost flow, right? So with that said, the cost flow for me centralizes on one key account, and that is your cost of goods available for sale. Why? So again, it centralized on cost of goods available for sale or COGAS, right? Why? Because your COGAS can tell you two things. Number one, your COGAS is actually brought up by two factors. The inventory that you have on hand or your beginning inventory plus your total cost of goods purchase. Beginning inventory plus purchases will give your cost of goods available for sale. Meaning, ito yung number of inventory that you can sell in that particular period. So it's a piece of a whole, it's a whole pie, COGAS. So that pie is created by beginning inventory plus purchases. So in total, yun yung pwede mong ibenta for the particular period. So now, dahil ito yung inventory that you can sell, there are only two things that can happen to it. Either you were able to sell it, so that would turn into cost of goods sold, or you won't be able to sell it and it will become ending inventory. So if the first thing that COGAS can tell you would be it's a mix of beginning inventory and purchases, COGAS can also give you your cost of goods sold. By how? Cost of goods available for sale minus ending inventory will give you your cost of goods sold. Because COGAS is a whole pie. You can look at it in two ways. That pie is comprised of either your beginning inventory plus purchases to make it your 100 units. Or that pie, what happens to that pie would be two things. Either a portion of it will go into cost of goods sold or a portion of it would be ending inventory. So two key equations. Beginning inventory plus purchases is equal to cost of goods available for sale. COGS or cost of goods sold plus ending inventory is equal still to your cost of goods available for sale. And then from there, whatever is missing, you can actually spot the difference. So let's master the comprehensive income statement, right? So in exercise 5.1, honestly, warm up lang to in terms of how we can solve for our comprehensive income statement. We're missing COGS, right? And how do we solve for COGS? We know that sales revenue minus COGS is equal to your gross profit. Or so therefore, 78,000 minus 30,000 will give you your missing COGS. So 48,000. The next step is, now that we know gross profit, from gross profit, the net income now is 10,800. So ano lang yung bumawas in order to make the 10,800 income? Well, definitely, that would just be your operating expenses. So 30 minus, sorry. So 30,000 minus 10,800, 19,200. Next, for comprehensive income statement example number 2, ang nawala naman is gross profit. So therefore, madali lang yan. That's a straightforward 108,000 minus 55 will give you a gross profit of 53,000. And then now that we know that the gross profit is 53,000, it goes down to a net income of 29,500. So ano ulit yung bumawas? The OPEX, right? So gross profit minus OPEX is equal to 29,500. So 53 minus 29.5 is equal to 23,500. Then finally, the last example, just to tie everything together, yung sales revenue naman yung nawawala. And again, sales revenue is just your COGS plus your gross profit, right? So that's 83.9 thousand plus 79.6. Our total sales revenue is 163,500, right? And then finally, for net income and net loss for this last example, it's just gross profit minus OPEX, so 79.6 minus 39.5 equals a net income of 40,100. So we're done with the warm-up. So ganun lang. Even though iba-iba yung nawawala, we're able to calculate it as long as we know the two equations and the one grand equation, right? Sales revenue minus COGS is equal to your gross profit. That's equation 1. Equation 2 is gross profit minus OPEX is equal to net income or net loss, right? And then once you combine everything together, sales revenue minus COGS minus OPEX is equal to net income or net loss. So now that we're done with the whole parang fundamentals of inventory, the next step is we'll take a deep dive into the two ways we can do accounting under inventory, your perpetual inventory system and your periodic inventory system. So again, kindly take note which companies have a tendency for perpetual, which companies have a tendency for periodic. So companies that look for perpetual are those that want better control. So usually, these are the high unit values, yung nagbebenta ng mga furnitures, appliances. Kailangan mabilis or up-to-date ka agad yung records nila instantaneously. That's why they need to perpetually update it. On the other hand, small merchandising businesses, medyo they don't need like real-time information. It's unnecessary or uneconomical kasi mahal magpagawa ng perpetual. So they only update at the end of the period. So the only thing or parang the key differentiator between perpetual and periodic is for perpetual, they recognize their cost of goods sold each time a sale occurs. So every time may sale, mag-recognize tayo ng cost of goods sold. On the other hand, sa periodic, we recognize cost of goods sold or we only compute for it only at the end. So yun lang yung difference. Perpetual, COGS each time a sale occurs. Periodic, only determined at the end. So first thing that you need to understand is that regardless kung perpetual man yan or periodic, it will go through the 9 different concepts that I really need you to master, broken down into 3 major segments. Your purchase, which will involve your freight, your PRA or purchase return allowances, and your PD or your purchase discounts. Your sales, that will involve your sale, your sales returns and allowance or SRA, and your sales discount or your SD. And then, of course, your adjusting entries and closing periods. So each portion, each segment, please understand and fully familiarize yourselves when it comes to all of the nuances. So let's master it from the point of view of 2 companies, your buyers and your sellers. So we're planning to do this so that number 1, you appreciate the different parties, and then number 2, as a shortcut, ma-master na natin purchasing and also sales in just one example. So the key idea here would be under sa York Gifts and si Bianchi Design is that si York Gifts bought from Bianchi Design. Both of them involve merchandising. So for York Gifts, that's from the point of view of a buyer, and then for Bianchi, that's the point of view of a seller. And they mimic each other similarly in terms of like the purchase and the sale. So the thing that we really wanted to emphasize for this exercise is that in every sales transactions, there are 2 parties. You have your buyer and your seller. And the reason why it's so important is not only when it comes to shipping, na if it's FOB shipping point or BSP, buyer shipping point, BSP, buyer shipping point, si buyer yung magre-recognize ng journal entry. In this case, since you bought inventory, that would either be a freight in or an inventory that will increase your inventory account. So if it's BSP or buyer shipping point, we will debit either freight in or inventory. So dito pa lang, if you're familiar with your inventory systems, if you see freight in, you know that this is a periodic journal entry, right? Pag perpetual, it should be inventory. So since hindi nagbayad si seller for shipping point, wala siyang journal entry. On the other hand, you have FOB destination point or SDP. SDP, seller destination point, it's the seller that pays. So in this case, it would be a freight out, debit freight out, credit cash kasi siya yung nagbayad. However, the difference between freight in and freight out is an outright expense. So marami nagtatanong sa akin, what's the difference between freight in versus freight out? Freight in is related kay buyer when you bring the inventory in, freight in. And freight in increases your inventory. Bakit mag-increase yung inventory? Because it was a necessary cost for you to be able to sell an inventory, right? So that's one. So freight in is inventory, it increases. Freight out, on the other hand, is related to seller, meaning nagbayad ka lang to sell it. So freight out is a selling expense, and therefore it does not increase your inventory, right? Freight out is a selling expense, and it's an outright expense. So again, freight in increases inventory related to purchases or buyers. Freight out are outright expenses related to sellers, and they are selling expenses. They don't increase inventory. So next would be, before you answer, I want you to ask yourselves two questions. Number one, ano ba yung point of view that our company is in? Buyer ba tayo or seller? Because that would definitely change your journal entries. And then number two, what is the inventory system that they are using? So with this, we're now ready to tackle York Gifts and Bianchi Designs. So please redo this problem with me right now. So get a piece of paper and then let's solve together. Number one is that I want you to think that in every sales transactions, there are two parties. So in this case, our buyer is your company. Our buyer is your company. And our seller is Bianchi. So thought zero before anything else is that I want you to read each and every business transaction that happens to them. And then talagang himayin nyo each given line. So every line, this is how my thought process would be. So the first transaction is on June 10, York Gifts purchased 7,600 from Bianchi. So thought zero ko would be, what's my POV and what's the inventory system that will be used? So for here, my POV is that si York is the buyer and Bianchi is the seller. And then looking at the requested, they actually want us to do perpetual and periodic. Pero ano yung mas madali? I want you to master perpetual first. So we'll do perpetual first. And then periodic, you just have to remember the three major differences from perpetual and periodic accounting. So una, buyer is York, seller is Bianchi, and then number three, we're gonna be using perpetual first, right? Number two is, whenever it's a purchase transaction, I ask myself, was it bought via cash or was it through credit? If may nakita na kayong terms 210 and 30, terms 35 and 15, basta may terms, automatic credit yon. Meaning it's an accounts payable from the buyer's perspective or it's an accounts receivable from the seller's perspective. So pag may terms, automatic, it's a credit. Walang cash involved for the purchase. So what that would mean is that for that particular purchase, that one transaction, meron tayong account payable na wag sa start with, ano ba yung unang utang mo from buying? So that's 7,600. And then be aware that for every purchase batch, meron niyang probably a return, a discount, but ultimately, the major goal is that York needs to pay the 7,600 or whatever is left after returns and discounts. And for that batch, kailangan ma-zero out yung accounts payable after they pay. On the other hand, si seller, si Bianchi, will probably have an accounts receivable that starts at 7,600. But eventually, mababawasan yan if there's a sales return or a sales discount. But ultimately, he'll be able to collect 7,600 or something that's less to that and mazi-zero out na yung accounts receivable niya after that batch. So every time there's a purchase, I want you to know that there's a accounts payable na may group of transactions related to it. And then for accounts receivable, may groups of transactions that's related to it. But eventually, both of them will be zeroed out for that one purchase, the 7,600 batch one purchase, right? The second thought is, sino ba yung magbabayad? It says FOB shipping point. So automatic, I think, BSP, buyer shipping point. So whoever will pay will have to make the journal entry. So in this case, buyer shipping point, si York yung magbabayad ng freight. So that will be a freight in. It's a delivery to the buyer. Papasok yung inventory. Freight in. So therefore, the journal entry would be debit inventory, credit cash. So either inventory or freight in. Bakit inventory to? Because we're using the lens of perpetual, right? For the seller, there's no journal entry. Third thought would be, okay, when is the discount period? So if the term is 210 and they bought it at June 10, I already have to anticipate what is the cutoff date for the discount period. So I arrived with June 20. How did I arrive with that? IFCL. Ignore first day, count last day. So June 10, ignore. June 11, 1, 12, 13, 14, 15, 16, 17, 18, 19, 20. June 20 is the cutoff date. If your pays Bianchi before June 20, may discount. If after, yung totoong walang discount, they'll have to pay. Right? So, one transaction, I thought of three things. Is it a cash or credit? If it's credit, may mazi-zero out na group of accounts payable and accounts receivable. Number two, sino yung nagbayad ng freight? And then number three, what is my discount? Right? So now, hopefully, we're ready for the journal entry. So, the journal entry lang naman here would be, since perpetual, we just have to use inventory all throughout. Right? So, for buyer, if you purchased, the journal entry in terms of purchase would just be debit inventory, credit accounts payable, 7,600. Tumaas yung inventory natin, and then now we have a whole pie of a payable worth 7,600. So every time may return, may discount, sa 7,600 yan, babawas, right? On the other hand, sa seller, well, they were able to sell, right? And when it comes to perpetual inventory, there are two entries every time there's a sale. Again, when it comes to perpetual inventory systems, there are two important systems, right? Recognize your revenue and match your expense. So journal entry 1 would definitely be debit accounts receivable 7,600, credit sales revenue of 7,600. Now, the question is, what is the cost of goods sold? In the 7,600 merchandise na Bianchi sold, how much talaga ba yung binayad niya for the cost of those products? So, if you look at the given, the merchandise purchased by York had cost Bianchi 4,300. So therefore, our COGS would be 4,300. So if this is our first journal entry to recognize the revenue, the second journal entry would be a cost of goods sold, debit, of 4,300, credit inventory of 4,300. So from inventory, we finally recognize the expense of cost of goods sold kasi nabenta na natin, right? So remember the car example. If 800,000 yung ginastos ko to get the car, at first, it would be inventory. Pero pag nabenta ko na ng 1 million yung car, I will recognize a revenue of 1 million, but a cost of goods sold of 800,000. So in the same way, si Bianchi, he initially bought 4,300 worth of this merchandise. So binenta niya at a higher price, at 7,600. So nung nakabenta siya, the first thing that he does is recognize a sales revenue of 7,600. But now, from inventory of 4,300, it has now become a cost of goods sold of 4,300. So with that, for this first transaction, ito lang naman. We've learned the purchase journal entry and then the sales journal entry. So again, two things to take note of pag perpetual. Inventory lang yung account, and that for every sales, there are two journal entries. The one to recognize revenue, and then the one to transfer your inventory into cost of goods sold. We can now move on to the freight. So here, York pays the freight because FOB shipping point. So si Bianchi has no journal entry, but si York has. And that would be debit inventory, credit cash. Because perpetual, we do not use the inventory. So here, mapapansin nyo yung format ko lang is, I'll highlight the dahil perpetual, inventory lang yung lalagay. Itong naka-highlight would be what should have been sa periodic, right? So now, dahil nagbayad ka ng 400, that's probably in cash. That would be debit inventory, credit cash of 400. Next. So we're done now with purchase. We're done now with freight. Third, returns. Damaged goods totaling 300 are returned to Bianchi for credit on June 12. The fair value of these goods is 70. So sa buyer muna tayo mag-focus. Right? So how do we value the return? Sa buyer, ay sa purchase, madali lang. For purchase, reverse a portion of accounts payable worth 300. So if ang utang natin was 7,600, kailangan bumaba yan ng 300 because of a purchase return. On the other hand, for seller, may two effects yan. Bababa yung sales revenue, so we reverse a portion of that initial entry, and then our cost of goods sold will be reversed also. But the question is it reversed at 300 or the fair value of 70? If you're familiar with the different iterations, you know that we use the fair value, so 70. So let's illustrate, right? Buyer muna tayo. For purchase, we need to reverse a portion of accounts payable. So therefore, if ito yung initial entry natin, we're gonna reverse a portion of it. So bababa si inventory ng 300. So credit inventory of 300. And then si accounts payable, bababa rin ng 300. So may purchase ka, may utang ka ng 7,600, bababa ng 300. Pero bababa rin yung inventory mo. So our journal entry for buyer is just straightforward. Debit accounts payable, credit inventory for 300. For seller naman, dalawa kasi yung initial entry natin. The recognition of the revenue and making our inventory turn into COGS. A portion of that, kailangan ma-reverse, mababawasan. So how would that look like? Okay, so now we go into seller or Bianchi's point of view. So in essence, parang the first thing that he did would be, dalawa yung na-recognize ng entries, right? He recorded the sales revenue and he recorded a cost of goods sold. Since my return, both of these would be affected, right? Wherein bababa yung revenue natin and bababa yung inventory. So we reverse a portion of these. So first na we reverse would be the sales revenue entry. So bababa yung accounts receivable by 300. And then our sales revenue will also decrease by 300. But please take note that rather than debiting sales revenue, we never debit sales revenue. We use instead the two contra revenue accounts. So in this case, dahil return, we use sales return and allowance of 300. But in essence, the idea here would be, if 7,600 yung nabenta mo, but then may nag-return ng 300, there are two things that you expect in terms of the revenue side. Bababa yung accounts receivable mo. From 7,600 yung utang sa'yo, minus 300 na binawas. So 7,300. And then number two, bababa yung revenue mo. So if you have a sales revenue of 7,600 minus your sales return allowance, you'll eventually get also 7,300 in terms of sales revenue. the next thing that will happen would be, bababa rin yung expense that you need to recognize. So, babalik na rin mo rin. Tataas yung inventory mo, pero bababa yung cost of goods sold mo from 4,300. So now, rather than lessen our cost of goods sold at 300, we need to recognize instead by 70 lang. Why? 70 na lang kasi yung fair value of that item na you receive. So if ever mabebenta mo pa siya, it's only at 70, not 300. So the difference between 300 and 70 should remain as cost of goods sold. So yung portion lang na pwede mo pang ibenta yung inventory. So right now, since the fair value is at 70, our nominal account for this should be debit inventory of 70, tumaas yung inventory natin ng 70, and then babawasan natin correspondingly ng 70 yung cost of goods sold. So again, to repeat, pag sales return and allowance, there are two journal entries also. One is to reverse a portion of our sales revenue at the amount of the allowance. So that's debit, sales return and allowance, credit, accounts receivable at 300. And then second entry would be for us to increase our inventory with the fair value of the goods that were given. So 70. So debit inventory, and therefore bababa yung cost of goods sold at 70. And then finally, this is just the summary. Kapag may return, it's just nare-reverse yung accounts payable mo, a portion of it. May nare-reverse na accounts receivable, and then may nare-reverse na COGS for purchase and for selling, right? And then lastly would be payment, right? So palagi, makikita nyo sa inventory, they'll just say pays in full. So always, we have to calculate whether did they make the discount period or not. We did the exercise kanina, and yes, they paid on June 19, which is before the cutoff date. Again, IFCL. Ignore first day, count last day. June 10 is the first day. So ignoring June 10, June 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So June 20. So now that my cutoff date, and we know that they've availed for the discount, let's first focus on buyer. How do you account for purchase discount? Well, basically, you just go back to the T account for that purchase batch 1. So ano ba yung accounts payable na related to the 7,600 purchase? Well, number 1, you had initially 7,600 worth of purchase. So una, yun yung utang mo. And then you had freight. So the palaging confusion would be, will freight affect your discount? No, it won't. Kasi you look at it, cash naman yung pinagbayad natin sa freight. And yung accounts payable na tinitingnan natin dito is the credit related to that purchase, right? So it won't affect your discount. What would affect your discount would be your return. Because your return, they will reverse a portion of that 7,600. So in essence, hindi natin alam how much yung discount pa, but ultimately we'll be able to pay it off so that magne-net zero to yung purchase batch na to. So what's the current balance? Your current balance is 7,300. Right? So what we do know is that we have to zero out this accounts payable kasi babayaran mo na eh. Dapat wala ka ng utang kay Bianchi as a buyer. So what you need is a debit of 7,300. That will signify your 7,600 na in payment. So debit accounts payable 7,300. That's the first step in that compound journal entry. What would be your debit to your accounts payable sa purchase discount? 7,300. Now that 7,300, what would be the split between our cash and our purchase discount, which is signified by pagbaba ng inventory, right? That 7,300, 2% raw niyan is discounted. So 2% of 7,300 will lessen your inventory. So ito yun. And then, so that's 146. So how did we get 146? 7,300 times 0.02, which is 2%, 146. So 146 will be discounted. And therefore, what you have to pay in cash is just 98%. Right? So therefore, may credit ka ng 146. And then yung 98%, would be the difference between 73 and 146, which is 7,154. That's the only thing that you need to pay in cash. So technically, nakamura ka. Because you were able to pay off a 7,300 loan or accounts payable by just paying 7,154. Yung 146 represents the purchase discount. But since we're in perpetual, we only use inventory. So we're done with the buyer's perspective. Let's now go to the seller's perspective. So seller, similar concept to purchase discount, except ang tinitingnan naman natin on the seller's perspective is our accounts receivable. So now we go into ano ba yung mga entries na ginawa ni Bianchi before we look into the T accounts for accounts receivable. Well, there are 4 entries that he created. So 2 batches. 1 batch of entries related to the initial sale, and then 1 batch of entries related to the return, right? So looking at our accounts receivable, what will happen? Well, we started off with a sale of 7,600, and then we lowered it or reversed the portion worth 300. So again, for sales return and allowance, you look at the total allowance amount, right? Iba yung case in terms of like reversing your COGS at 70. And then we know that there's probably gonna be a discount and ultimately a collection, but eventually that accounts receivable will zero out. So now we need to know the current balance of 7,300. So therefore, if this is our journal entry when it comes to sales discount, the very first thing that I want you to fill out would be what is the corresponding credit or signifying the payment of that accounts receivable. Well, basically, if the current balance is a debit 7,300, we need a credit of 7,300. So 7,300. And then, ang hindi na lang natin alam is how much did we pay in cash and then how much was the discount. Well, again, using the same theory, 7,300, 2% of that was discounted. So 2% of 7,300 is 146. And then, pupunta yan sa sales discount. So therefore, ang babayaran na lang nating cash would be 73 minus 146, which is 7,154. That will give us our debit cash of 7,154, debit sales discount of 146, and then credit accounts receivables for 7,300. So now we're done when it comes to a purchase discount and a sales discount. So ano yung ulit yung similarities? Number 1, you zero out the accounts payable related to that purchase. So debit AP of 73, or you zero out the accounts receivable related to the purchase, credit 73. And then mag-iiba na lang is your cash in inventory or your cash in sales discount, right? So palagi yung inventory, yung multiply mo lang yan ng 2% yung 73 to get this. And for the sales discount, i-multiply mo lang yung 73 by 2% to get this. And then the rest will be the cash. Right? So technically, kaya siya discount is because the cash that you will pay or the cash that will you receive is not equal already to yung accounts payable or AR na outstanding because of the discount, right? So with that, we've really mastered 2 things. Or purchase inventory entries for 2 for purchase, freight, purchase returns and allowance, and purchase discount. And we've mastered the sales perspective. Your sales, your SRA, and your SD. So we're 7 concepts done with perpetual, right? So tapos na natin tong 7. So again, in summary, for purchases, the 4 entries lang would be a purchase, initial purchase, a potential freight in kapag buyer shipping point, and then your returns, and then your discount. So things to note, your discount will probably, if taken, be a compound journal entry. Yun. So 4 entries. 4 perpetual journal entries. Right? For purchase. And then, puro inventory lang yung pangalan. For perpetual. For periodic, there are 5. Right? For their periodic, there are 5. 2 for initial sale. 2 to reverse a portion of that through the sales return. And then your sales discount is a compound journal entry. So there's 5, but technically it's just 3, right? So ano yung sa perpetual, important na may cost of goods sold, right? So now, the question is, what if periodic? So we're done with perpetual in terms of purchasing and selling. let's now go back to the three nuances. The first nuance is that initially, for perpetual, there's inventory for purchases. Pero, for periodic, iibahin natin yan lahat. Gagawin natin siyang purchases, freight in, PRA, and PD. Right? So, instead, ito yung journal entries natin before. To turn it into periodic, we just change purchases, freight in to signify freight, return, and discount. Basically, lahat ng inventory for purchase, ibayin lang natin yung pangalan. Yung purchases and yung freight in, kindly remember, has a normal debit. Yung purchase return and purchase discount has a normal credit. Right? So, balikan natin. Normal debit, si purchase and si freight in. Normal credit, si purchase return and allowance and purchase discount. So, if nalilito kayo, just make the journal entry for that particular transaction. Replace inventory with either purchase, freight in, PRA, or PD, and then you'll be able to figure out na, purchase and freight in has a normal debit balance. PRA and PD has a normal credit balance. The second change is when it comes to our sales transactions. Again, for periodic, we only recognize cost of goods sold at the end. So if this were our perpetual journal entries, ang changes lang would be, tatanggalin natin si COGS for the initial sale, and tatanggalin natin yung COGS when it comes to the sales returns and allowance. And basically, that's your periodic. So with that, we've mastered purchase and sales and periodic. So ano ulit yung two nuances? For periodic, iba lang yung name ng inventory when it comes to purchase-related accounts. And then number two, wala tayong COGS every sale. So tatanggalin nyo lang yung sales. So with that, the last thing na lang that we need to master would be the closing entries. So with that, we go to 5.9 or the Paulsen industry. So prepare the necessary adjusting entry, variance is not material, and then the income statement. So first thing to close is that the idea is, regardless kung perpetual ka or periodic, you will have a physical inventory count at the end. So perpetual, you'll probably have a record in terms of gaano karami ba yung inventory ko. But the key thing here is that the physical count is more accurate than your records, regardless kung perpetual or inventory. We always follow the physical account. We always follow the physical count. So if the physical count is higher, you increase your inventory. If the physical count is lower, you decrease your inventory. The other portion na gagalawin natin to do the increase or the decrease would be our cost of goods sold because they're linked, right? Ang inventory naman, either it's an inventory as an asset or it's an expense already as a COGS. So pag tumaas yung inventory natin, bababaan lang natin yung cost of goods sold. Pag bumaba natin yung inventory, tataasan natin yung cost of goods sold. But again, if that's too complex, just memorize that. Number one, we follow the physical count. Number two, we increase the inventory if it's increased inventory or lower, where the corresponding partner would be cost of goods sold. So let's apply. So on record, it's 21,600. Ending inventory per perpetual records, 21,600. Now, based on the count, 21,000. So ano yung susundin natin? Of course, the count of 21,000. So therefore, 21,600, gagawin natin 21,000. That's a decrease of 600. Our journal entry or closing entry, therefore, would be debit COGS, credit inventory. So binabaan natin si inventory by 600. And therefore, our cost of goods impact for this would be, our old COGS is 208,000 plus our debit of 600 now because of this adjusting entry. So our adjusted COGS would be 208,600. So now, we can create our income statement. So basically, kung master nyo na to, ito lang naman yung format. 5 formats. You have your net sales, your COGS, your gross profit, your OPEX, and your net income. And then please take note na same pa rin yung headers natin. So how do we solve for this? We basically get muna the sales revenue, less any sales returns and allowance, less any sales discount. That will give us 378 minus 13 minus 8 are net sales of 357,000. So same formula, pero pag sales, may arte lang. You have to get net sales. And net sales is sales revenue minus SRA minus SD is equal to net sales. We're done with that. Next is we get our adjusted COGS. So our adjusted COGS is not 208,000. It should be 208,000 plus our adjusting effect of 600 increase in COGS. So our adjusted COGS is 208,600. So 2,800, 600. So 357 minus 208.6 is equal to a gross profit of 148,400. And then for OPEX, we just list it down, right? Per magnitude. So the biggest is salaries, wages, and expense at 59,000. Next would be your rent expense at 20,000. Next would be your insurance expense. And then please, wag niyong kakalimutan, under operating expense would be freight out. Freight out is always an expense. 7,000. So if you add all of those two together, you have a total operating expense of 98,000. 148,400 minus 98,000 will give us a net income of 50,400. So again, it looks complicated, but if mastered nyo yung comprehensive income statement na it's just net sales minus COGS is equal to gross profit minus OPEX minus is equal to net income, this should come simple for you. Ang nag-iba lang is si sales. We chose net sales. When we say net sales, that would be sales revenue minus SRA minus sales discount. So now that we're done with our income statement, we can now close. So what would be the closing? So things to note is that, again, of course, we first close our revenue. So that would be debit sales revenue, credit income summary, but then there are two additional credits. Credit SRA and credit sales discount. So usually, the income summary is a squeezed figure. What do I mean by that? 378. So you have 378 na debit, right? 378 minus 13 SRA minus 8 is 357. So 357 income summary represents your net sales, right? Net sales lang yung kino-close off. We zero out our expenses next. So it's the same debit income summary and then just all of your expenses. But please take note na COGS nito dapat should be adjusted. And then we close them both. So 357,000 minus 306.6 means that you have 50,400 na net income, mas malaki sa si credit. Therefore, our last would be debit income summary of 50,400, credit owner's capital of 50,400. And since credit to, this is a net income. And then finally, we have drawings of 5,000. So drawings would be debit owner's capital, credit owner's drawings of 5,000. So let's get the ending capital. We first look at our beginning capital. So ang normal is credit. So our beginning capital is 540,000. And then yung closing entry number 3 natin shows a net income of 50,400. And then our drawings signify 5,000 in debit. So by adding those two together, 540 minus 50,000 540 plus 50,400. So let's add 540,000 plus 50.4 minus 585,400. Yung ending capital natin. Right? So again, the only thing that I want you to be careful of is net income or net loss. So done. We're done now when it comes to the whole inventory systems, right? But now, let's just focus on analysis na. So, if you're watching this recorded, take a break, but then super crucial rin the second part. This is more of an analysis part na. Right? So, finally, we can analyze now that we've mastered how to record. So, to summarize, there are two forms of the statement of comprehensive income. You have a single statement na ito yung itsura. And then we have a two-statement approach, which is just basically reminiscent of our gross profit, and then gross profit minus OPEX is equal to your net income. It's the same. It will give you the same. Iba lang yung format. Yung isa single, pinagdikit lang. Yung isa second, two-statement. In terms of presentation, there's also in terms of natures of expenses and function of expenses. Most of the time, ang ginagamit natin is function of expenses, right? So kindly familiarize yourselves. But more than that, ang importante for me, for you to understand, is your gross profit rate. What it does is that it looks at your net sales as a whole pie, 100% in net sales. Your gross profit rate tells you, out of my total sales, how much of that is purely gross profit, how much of that was my expense. So for example, in my whole pie, I was able to sell 1,000. Out of that 1,000, 700 yung expense ko. 300 yung profit ko. So what is my gross profit rate? My gross profit rate is 30%. That is 300 out divided by net sales of 1,000 is equal to 30%. So if I say that my cost of goods sold is 70% of my net sales, automatic, I know that they make up 100%. So if 70% yung COGS, my gross profit rate would be 30%. If my cost of goods sold percentage is 40%, my gross profit rate is 60%. So COGS plus gross profit is equal to net sales. So ang 100% of the pie is your net sales. So this is just a breakdown of how you do it, right? So to get the gross profit and then calculate your income from operations. But I know, kind of intimidating. So let's look at an exercise that helps you with this function of expenses and gross profit ratio. And the perfect for this would be si Natasha and si Boris Footwear. So meron tayong mga blank accounts, right? So the second iteration that I want you to memorize would be si sales. Gawin lang natin siyang mas complicated. Dati, isa lang siyang line item, sales. But now, let's add sales revenue all the way to your SRA and SD. But it's still sales minus COGS is equal to gross profit. Gross profit minus OPEX is equal to net income. Nadagdagan lang, how do you calculate your net sales? So let's first focus on this. One, si Natasha muna tayo. So, number one, ito yung given. So, similarly, you can manipulate it in such a way that, okay, I have a missing SRA. How do we solve for it? Well, at the end of the day, the net sales is 80,000 and then yung sales revenue ko is 94,000. So, I'm sure na 14,000 yung binawas ng sales discount and SRA. Since yung 2,000 was already sales discount, the other 12 out of that 14 will come from our SRA. So, basically, that's a logical way of looking at it. But if you want mathematical, I already pasted it here. So, yun lang yung titingnan natin when it comes to the missing SRA. So, we now know na 12,000 si SRA. But regardless, ang importante lang naman yan is that we have net sales of 80,000. If ang missing naman natin next is our gross profit, net sales of 80,000 minus 56,000 will give us a gross profit of 24,000. So, yun, that's basically the one thing that we've been doing since our warm-up. So, 24,000. And then lastly, 24,000 minus blank is equal to 12,000. So, our operating expenses will be 12,000. So, we're done with Natasha, right? So, let's again practice with Boris. Iba naman yung missing. Ang missing is yung sales revenue. We know that sales revenue is the highest amount here. So, technically, that is just our net sales plus our sales discount plus our SRA would be 98,000 plus 1,000 plus 5,000. Our sales revenue would be 104,000. Next, now that we have net sales, madali na lang to. Net sales is 98,000. Our gross profit is 37,500. So we have 60,500. So 98 minus the COGS of 60,500 is equal to 37,500. Then finally, now that we know the gross profit, we know the operating expense. Because from 37,500, ilan yung binawas mo to get the net income of 15,000? Well, one way of solving it is 37,500 minus 15,000 is equal to 22,500. So with that, we're done in terms of analyzing the more complex variation of the comprehensive income statement. Now, let's get the gross profit ratio. So please memorize gross profit ratio. Gross profit ratio is, again, a portion of gross profit based on net sales. So gross profit, yung mas maliit na number, divide by net sales. So ano yung gross profit natin here? It's 24,000. Ano yung net sales natin? 80,000. So 24 divided by 80 is 30%. So if my whole pie is 80,000, 30% of it is gross profit, which is 24,000. 70% or 56,000 is equal to cost of goods sold. So ang big pie natin here is our net sales. Again, let's go to Boris. What is our gross profit rate? So step 1, what is my gross profit? 375,500. What is my net sales? Net sales, don't use gross sales of 104, that's wrong. It's net sales at 98,000. 37,500 divided by 98,000. So let's just do that to show. 98 is equal to 38.26 or around 38%. So if you look at it from a visual representation, 98,000 is the whole pie. 38% of it is gross profit, which is equal to 37,500. And then 62% is cost of goods sold. So the higher gross profit rate, the better you are in terms of business. Mas gusto mo na yung buong revenue, a bigger portion should be in terms of your gross profit. So now, let's finally, the last thing that I want you to master would be inventory cost flows, right? So we're done looking at the whole perpetual periodic. Iba naman yung cost of goods available for sale and in terms of like the whole inventory cost flow. So again, two equations that I want you to master. Beginning inventory plus cost of goods purchased is equal to your cost of goods available for sale. So that's the first equation. The second equation I want you to remember would be cost of goods sold plus ending inventory is equal to your cost of goods available for sale, right? But we manipulate that second equation na if cost of goods COGS is equal to COGS plus ending inventory, the way to get our COGS would be COGS minus ending inventory, so equal to cost of goods sold. To understand this, let's look at alpha to delta company, right? So ito lang yung iintindihin nyo. So if it's cost flow and it's asking you for your COGS, use this major equation. I call this the cost flow equation. The cost flow equation just tells you that beginning inventory plus cost of goods purchased is equal to your COGS. That's equation number 1. Equation number 2 is that COGS is equal to ending inventory plus COGS. But since ang gusto natin kunin is COGS, we just say COGS minus ending inventory is equal to COGS, right? So with that said, let's fill it out. Ano ba yung mga missing? Number 1 thing na I want you to familiarize is how do you calculate for cost of goods purchased? Cost of goods purchased, the equation would be net purchases plus freight in is equal to your cost of goods purchased. Now, itong dalawa lang yan. Net purchase plus freight in is equal to cost of goods purchased. How do we get net purchases? Well, that would be purchases less PRA less PD. Right? So, in a nutshell, the whole equation should be purchases minus PRA minus PD plus freight in is equal to cost of goods purchased. So that's the first thing that I want you to take note of. Right? So now that we know, let's go to alpha. Si alpha, ang first missing niya is net purchases. So how do you solve for it? Net purchases is purchase minus PRA minus PD. So that will give you 1,575. So we know that the net purchases is 1,575. So how do I get my cost of goods purchased? Well, your cost of goods purchased is just net purchase of 1,575 plus freight in equals 1,670. Right? So now the cost of goods is 1,670. So what is my cost of goods available for sale? Well, my cost of goods available for sale is just my beginning inventory plus my cost of goods purchase is equal to 1,835. But to prove the point, given rin yung ending inventory in yung COGS, if I add my ending inventory, my COGS, to my ending inventory of 310, it will give me 1,835. So with that, we're done with the Alpha company. So ito lang talaga. Pag cost flows, or if they're asking you what is cost of goods purchase, what is cost of goods available for sale, what is COGS, what is ending inventory, anytime they ask you that, use this cost flow equation. Next, let's go to Bravo. Ang nawawala kay Bravo is the PRA and their freight in. So let's first look at their PRA. Kapag PRA, PD, or purchase, we just look at the net purchase portion. So from 1,060, naging raw 1,030 yung net purchase. So nabawasan tayo ng 30. Yung alam natin na the discount is 2,000. So 28 out of that 30 na bawas will come from your PRA. So this is the mathematical way of looking at it. So now that we know that 28 to, our net purchase is 1,030. Our cost of goods purchase is 1,280. We know that our cost of goods purchase is just net purchase plus freight in. So the missing amount to make it 1,280 would be 250. So our freight in would be 130 plus 250 is equal to cost of goods purchase of 1,280. So 250 yung freight in. So alam na natin yung cost of goods purchase. From there, we know that we double check. Beginning inventory of 70 plus cost of goods purchase of 1,280. So 70 plus 1,280. Is equal to 1,350. And then finally, ang missing natin is ending inventory. We know that ending inventory plus COGS is equal to 1,350. So that's just basically 1,350 minus 1,260 equals 90. Cost of goods sold. So we're done with Bravo. So again, just to master everything, let's go to Chi. Ano nawawala kay Chi? Again, purchases. So we first focus on net purchase section. We know that the purchases is just basically your net purchase plus 25 purchase discount plus PRA. So that would be 6,525. Now that we know our net purchase is 6,210 and our cost of goods purchase is 7,940, there's a missing freight in. So how do you solve for the freight in? We know that net purchase plus freight in is equal to cost of goods purchase. If 6,210 plus freight in is equal to 7,940, our missing freight in would therefore be 1,730. So now we know our cost of goods purchase and our freight in. So how do you get COGAS? It's either beginning inventory of 1,000 plus 7,940 is 8,940. So 8,940. And then to double check, what's our ending inventory plus COGS? 1,450 plus 7,490 is equal to 8,940. And then finally, we have delta. And out of the 4, I really love the delta 1. Why? Because it really shows you na hindi mo naman siya chronologically maayos. Parang siyang Sudoku. Can you get beginning inventory at the first time? No. Mahirapan ka. What you need to do is first get your cost of goods purchased so that you'll be able to solve for your beginning inventory. So rather than K, let's look for M first or L. And then to get cost of goods purchased, kailangan natin makuha si L, right? So first, let's solve for L. We know na our net purchase is 41,090. That would mean that from 43,810 purchase, may nabawas na PRA of 1,020, may nabawas na PD na hindi natin alam yung amount. So we know that the total discount would be what? 1,700 because 43,810 minus 2,020 of PRA minus 1,700 of PD is our net purchase of 41,090. Now that alam na natin yon, we can get cost of goods purchase, which is basically 41,090 net purchases plus freight in of 2,240. It will give us a cost of goods purchase of 43,330. And then now that we know cost of goods purchase, we can now just go to the equation na beginning inventory plus cost of goods purchase is equal to your COGAS. So what is our missing? That would be COGAS of 49,000 that would be COGAS of 49,530 minus 43,330 45,200. Sorry. 6,200. Sorry. Again. 49,530 minus 43,330. 6,200. Beginning inventory. So with that, we're able to solve our cost flows. But again, I just want you to be experts in terms of cost flow. So dalawa lang naman yan. Pag income statement, net income, gross profit yung tinanong, use your comprehensive income formula. Kapag COGS, COGAS, ending inventory, beginning inventory, pag yun yung tinanong, use this equation. So let's put everything together using JZeng, right? So don't panic when it comes to a long format problem. Don't panic, group the transaction. So what do I mean by this? Maraming nangyari from April 4 to April 30. But in essence, ito lang naman yung nangyari. Number 1, nag-purchase ako kay JMac. So with that purchase, I will probably have journal entries on purchase, purchase return, purchase discount. Number 2, nagbili ako kay Lee Sports. So second batch of purchases. So under Lee Sports, meron din akong purchase, purchase return, purchase discount. And then finally, last would be Everett. I have a 3 purchase. So my kay Everett, I have a purchase, purchase return, purchase discount. So first thing I do, I look at ilang batches of purchase. For this, tatlo. JMac, Lee Sports, and Everett. I will make a separate accounts payable table for each of them para hindi ako malito. Right? And then the rest will probably be sales. Right? So for purchase, I know 3 groups of purchases. So I'll make 3 different accounts payable for the JMac, Lee Sports, and Everett. Sa sales, ibang usapan. So I'll take it as I come. So let's start muna with Perpetua. So we first start with si JMac. So si JMac, we bought it 760. So 2 things I'll take into account kagad kay JMac. Number 1, it's in credit. Number 2, FOB shipping point. So I'll probably have a freight in for this. Right? So let's start. Number 1 is debit inventory credit AP of 760. Again, for perpetual, inventory lang yung gagamitin natin. So if you want the periodic counterpart, just look at the not. So not purchase, right? So inventory lang. Next, we paid for the freight. So BSP, buyer shipping point. So tayo mag-record. That's debit freight in, credit cash of 40. But dahil perpetual, inventory lang. So debit inventory 40, credit cash of 40. Number 3 is my sale. So we take the sale as they come. What do I need to remember? Pag sale, there are 2 journal entries kapag perpetual. One to recognize the revenue, another to recognize the cost of goods sold. So that would be debit AR credit 1,150 in sales revenue. So sales revenue of 1,150. I know that this is credit because it's on my terms, right? Next, cost of goods sold is 790. Credit inventory of 790. On April 10, we received 60 from JMac. So si JMac pa rin, the first batch of purchase. So that would be what? Bababa lang yung accounts payable and inventory natin. So we will reverse a portion. So that would be debit AP 60 credit inventory 60. So since perpetual, we use inventory. And then, from there, from April 11, dito ka na parang masashock kasi nag-iba na yung purchase. But again, relax and understand that this is our second batch of purchase. So gagawa rin ako ng accounts payable for Lee Sports. So same, but the only difference is, paano niya binili si Lee Sports? Si Lee Sports, walang term. They paid in cash. So therefore, this is debit inventory, credit cash of 420. And then, we come to April 13. We paid JMAC in full. So finally, we'll be able to close out the accounts payable related to JMAC. The first question I ask whenever I see that they paid in full is, when is the cutoff date? So, sabi doon, it was bought April 4 in terms of the term 210. So our cutoff date would be starting from April 4, IFCL, ignore first day, count last day. April 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. April 14 is the cutoff date. They paid in April 13. Will they get a discount? Yes. So how do we get the discount? We look at the entries that are related to the JMAC purchase. Sino ba yung mga nangyari kay JMAC? Number 1, bumili ka ng inventory. So, may 760. May freight, but your freight does not affect your accounts payable, so we ignore that. And then, finally, may return worth 60. So, we add 60. So, in order for us to zero it out, we need to see the current balance. The current balance right now is a credit of 700. So, in the compound journal entry for my purchase discount, my first thing that I'll do is debit 700 to zero out my accounts payable. Pag may 700 na dyan, magsi-zero na yan. The next is, that 700, ilan yung portion na discount? So that I'll multiply the 2% on 700. So 2%, 0.02 times 700, I'll get 14. 14 is my discount. So this would be my discount. And then finally, I can squeeze cash. 700, yung utang ko, may discount lang ako ng 14. So I need to pay in cash 686, which is 98% of 700. So this is my journal entry for my purchase discount. So again, pag discounts na availed, it's a compound journal entry. For your life to be easier, step 1, find the debit for accounts payable that will zero out the AP for that particular batch of purchase. Step 2, multiply the discount rate to the 700 or to the balance. You'll get your inventory. Step 3, just balance it. Ano ba yung isi-squeeze natin na credit cash figure? Next, after nun, may third batch na tayo of purchase, si Everett. So now my term, iba, 310. So 3% if paid within 10 days. So again, debit inventory, credit AP for 800. Received cash refund. So now, matatakot kayo. May return. Pero, they paid in cash. So what would be my journal entry? Well, your journal entry would be a cash refund. So debit cash, so tumaas yung cash mo, bababa yung inventory mo of 50. Right? So this is still a purchase return. But again, since perpetual, we'll use inventory. So we paid freight on Everett. So what does it tell us? The Everett one is a FOB, shipping point, BSP. So that should be debit inventory, credit cash of, this should be 30. So for Everett, for freight, it's a shipping point. So that should be debit inventory, credit cash of 30. And then 10, for April 18, we sold merchandise. So we sold merchandise in terms of term. So again, pag perpetual, 2 journal entries. One to recognize the revenue of 980. The second one to recognize the COGS of 520. So now, 420 or April 20, doon raw sa accounts receivable mong sale, may nagbayad na in cash. So this is basically a journal entry na tumaas yung cash mo of 600, bumaba yung accounts receivable mo by 600. Next, you paid Everett Sportswear in full. So, again, pag in full, weird question is, nag-avail ba sila ng discount? If you use that April 14 nila binenta, the term is 310. So 10 days after April 14 would be 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. IFCL, April 24 yung cutoff date. They paid on April 23. They availed of the discount. So now, I again go back to my accounts payable related to Everett, the third batch. So ano ba yung nangyari? We bought 800 in purchase. Nagkaroon ng freight, which is no effect, right? And then, wala namang return. So, my current balance is 800. So, I have to do a debit, AP of 800. 800 times the 3% discount will give me 24, which will be my purchase discount, but in this case, inventory lang yung pangalan. And then 800 minus 24, that will give me 776. So this is my journal entry. So in April 26, they granted an allowance of 40 to the members. So this is a sales return. Now, how do we treat this? Sabi nila, anything below 200 is considered immaterial. So from here, 40 is immaterial. So yung reversal natin for COGS will automatically be 0. Wala nang value. Immaterial na siya. Wala na siyang value. So walang fair value, etc., etc. It's immaterial. It's less than 200. So ang i-reverse na lang natin is our sales revenue with a debit sales return allowance of 40, credit AR of 40. And then the last one is naka-receive ka raw ng cash payments on account. So a portion of your cash increased, credit 820. So with all of those, by using those 14 sets of journal entries, we can now know our inventory per record. So according to here, 1,800 yung balance natin. And then, when we bought, tumaas ng 760. Then nagkaroon ng freight, so 40. And then, wala naman tayo sa inventory when it comes to the sales. But for the COGS, bumaba ng 790. Then for the return, bumaba ulit ng 60. And then, when we bought from Lee Sports, tumaas yung inventory natin ng 420. And then, when we took the discount in terms of paying, we had a purchase discount of 14. And then, when we bought from Everett, tumaas ulit yung inventory natin by 800. And then, nagkaroon ng return, so bumaba ng 50. And then, nagkaroon tayo ng freight in at 30. So, wala yun in terms of like the debit. And then, credit wala, sold credit. And then, our COGS would be less 520. So, and then we had our return. And then finally, we had a discount of 24. So by doing all of those, wala naman na tong tatlong impact. We know that our ending balance is 2,392. Now, we do a physical count. 2,392 versus our physical count of 2,332 will give us a decrease of 60. So 2,392 minus 60 will give us the correct physical count of 2,332. So our journal entry would be debit COGS 60, credit inventory 60. So how do we solve for our adjusted COGS? When we look at the journal entries na may COGS tayo, so one would be in terms of the sale, the first batch of sale at 790. The second would be the second batch of sale at 520. And then we have a a debit COGS of 60, giving us our adjusted COGS of 1,370. In terms of net sales, how do we get it? In terms of net sales, we first start with any sales revenue of 1,150 and 980. So you'll have the last is sales return at 40. So wala naman tayong sales discount. So 2,130 minus 40. So ending balance is 0. So 2,130 minus 40 is 2,090. So with that, we know that sales revenue of 2,130 minus SRA of 40 is equal to our net sales of 2,090 minus cost of goods sold of 1,370 is equal to our gross profit of 720. And then the last thing that I want you to do is let's do periodic. So first change is, again, for periodic, lahat ng inventory that's related to purchase, gagawin nating purchase freight in or PRA in purchase discount. So with that, ito yung magiging itsura. Itong inventory na to will become purchases. This one will be freight in. This purchase return would be purchase return. The second time that they bought would be purchases from Lee Sports. When they took the discount in their first one, you have a purchase discount. When they bought again from Everett, that's purchases. You had the purchase return, so purchase return. You had the freight in, so freight in. And then you had the discount taken when you paid Everett, so that's a purchase discount. So yung first change na ginawa natin was we changed all the inventory accounts na related sa purchase and changed them to the 4. Purchase, freight in, which has normal debit balances. And then your purchase return and purchase discount, which has normal credit balances. The second change that we'll do is we'll take out anything that's related to cost of goods sold. So yung sale, tatanggalin natin yan. The first sale. The second sale, tatanggalin natin yan. And then, yun, that's it. And then because, wala na tong third because 0 naman siya because it was immaterial. The last step is we close using and find our cost of goods sold. So how do we do it? First is we get the balances of these 4 items. So purchases, 760. Purchases, 420. Purchases, 800. Will give you total purchases of 1,980. Next, purchase return, ay freight in muna tayo, 40. And freight in 30. Next, giving you the freight in of 70. Next, purchase return allowance, we had 60 and 50. So 110 yung total. And then purchase discount, we had 14 and 24. So we had an ending balance of 38. So now that we have this, we can now go to our second master equation or cost flow equation and plug in everything. First is beginning inventory, 1,800 round. Next is what is my net purchases? That would be purchases of 1,980 minus PRA of 110 minus purchase discount of 38 will give me my net purchase of 1,832. So pag tinanong ko kayo, what's net purchase? It's 1,832. Now, if I ask you, what's cost of goods purchase? That's 1,832 plus the freight of 70. That's 1,902, right? So 1,800 plus 1,902 is your cost of goods available for sale of 3,702. So 1,800 plus 1,902 is equal to 3,702. Less ending inventory based on our count. So yung count yung titingnan. So 2,332. So 3,702 minus 2,332 is equal to your cost of goods sold at 1,037. So to check, ending inventory plus cost of goods sold will still equate to your COGAS of 3,702. So now that we know this, it's easy na to make our adjusting entry to show our cost of goods sold. So again, i-debit nyo muna yung inventory based on account at 2,332. Then we debit PRA at 110 and debit PD at 38. And then we credit our inventory beginning at 1,800 and our purchases of 1,980 and our freight in of 70. So lahat ng nasa end, debit yon. Inventory based on count at the end, PRA, PD, all of those will be debits. 2,332, 110, 38. Lahat ng nauna, credit. So inventory beginning, purchases, freight in, credit. May missing amount. That would be your cost of goods sold at 1,307. So it should equal. So using the cost flow method, madali lang kayo gumawa ng ending adjusting entry for COGS sa periodic. So please master cost flow inventory, right? And with that, we officially end the exercises. So if you have any question, kindly let me know. But again, the focus here would be, if you have extra time today, go over the lecture for inventory in chapter 6. Tomorrow, focus on getting a good score on the quiz on Wednesday, November 15. So I'll hold a live session tomorrow for consultations. I'll announce it in the class, mga siguro 8 p.m. when I get home from work. Pag-usapan natin chapter 5. After chapter 5, we'll review it. New slate, we prepare for chapter 6 quiz. So inventory. And then this weekend, let's talk about cash lang. And then, just prepare parang quiz tayo sa Wednesday. We'll see pa kung may quiz on Friday. And then, we'll have a whole review on Saturday for your exam. So, for those na kinakabahan, let's just ramp up. So, three things lang naman. So, we'll prepare for the quiz. 5. We'll prepare for quiz 6 next week. And then, cash. And then, we're ready for the exam. Right? So, thank you so much. And then, kindly let me know if you have any questions.